Hello friends, welcome back to my class. Let's start with what is accounting or the definition of accounting. So accounting basically is I am royal challenges. Well, this may sound funny for you and you might find it funny, but believe me, this will help you to grasp this whole things easily. So these shortcuts, if you just take a note of these shortcuts, this will help you remember the whole definition. So, what is accounting? Accounting is I am royal challenges of economic events. I will start with what does I means. I mean identifying, M means measuring, R means recording, and C means communicating. So, accounting is I am royal challenges of economic events, where I means identifying, M means measuring, R means recording, and C means communicating. What do we identify, measure, record, and communicate? So we identify those transactions which can be recorded in the books. So all the transactions which are related to any business transactions or economic events, they are identified. So that is what is meant by identifying. What is measuring? Measuring means anything which can be measured in terms of money is measuring, quantifying. What is recording? Recording means recording all the transactions which are identified and measured in terms of money in a chronological order. What do you mean by chronological order? Chronological order, it means recording as and when the transactions takes place. And what do we do this? We communicate it to the interested parties. So all the transactions which are recorded are communicated to the interested parties. So the transactions which are identified and which are related to the economic events. Let's come to what is economic events. Economic events. What are events? Events means any happening of something. And what do you mean by economic? Economic means anything which is related to money. So any event which is related to money is called economic event. We have mentioned few examples of what does economic events mean. This will help you understand economic event in a more better way. So buying a house, rendering of services, purchase of material. You see, in all of these three cases, when you're buying a house, you're paying the money, you're getting a house. Rendering the services, you're getting money. You are purchasing material, you're paying money, you're getting material in return. So all of these events or the transactions which are happening involves money. So any transaction which involves money, which can be measured in terms of money, it is recorded in the books of accounts, and that is what is meant by economic events. Now economic events are further divided into internal events and external events. What do you mean by internal events? Any guesses? So it's pretty simple, as the word says, internal. Internal means any event which is happening within the organization are called the internal events. The example is supply of raw material from one department to other. So consider a factory. A factory has a lot of departments. One is raw material, the other is like the finished good. I'm giving a very layman example. So if you are supplying the raw material from one department to other department, that is internal event, something which is happening within an enterprise or organization. And what do you mean by external events? Just the opposite of internal events, which is the events occurring between the outsider and the organization. That is, suppose you purchase the material from an outsider or a supplier, that's an external event. Now we'll move to the next topic as to what is qualitative characteristic of accounting information. Qualitative characteristic means, what do you mean by qualitative characteristic? So, in simple terms, it means what qualities the accounting information should possess. Okay, and the easiest form of grasping this is Rajasthan Royal under construction. Rajasthan Royal under construction. What does R means? R means reliability. Further, R means relevance. U means understandability, and C is comparability. Okay. So what are the qualitative characteristics, or what qualities an accounting information should possess so that you can believe in the information which is provided? So the short form is Rajasthan Royal under construction, wherein R stands for reliability, relevance, understandability, and comparability. So your accounting information should have these qualities. Reliability. The information provided should be reliable. It should be genuine, free from any error. Relevance. It must be available at the time when it's needed. It's not that you need the information today and you're getting that information like after an year. So after an year, the information provided to you will not make any sense. So it should be provided, or it should be available at the time when it's actually needed. Understandability. Simple. It should be easy to understand. It should not be complex, so that the sender and the receiver should actually get the true meaning of what the sender is trying to tell. The receiver should understand. So it should be pretty clear. What do you mean by comparability? It should be comparable. And comparability happens within the organization and outside the organization. When I say within the organization, uh, consider that an organization's accounting information of 2024 is compared with 2023 data, and it should be easily comparable. That is comparability which is happening within the organization. Comparability with the outside the organization means you are comparing your data with someone who is in the same line of business. Suppose you are in a cotton business and you have your financials or the accounting information for 2023. Some other organization who is also into the cotton business, you compare their accounting information of 2023 with your data. That is comparability which is happening outside the organization, like with someone who is outside. And when we say comparability happening within the organization, it's when you compare your data with previous year data or quarterly data. Okay. Then what is the primary objective of accounting? Like, why do we do accounting? What is the necessity of accounting? I have told you about why do we do accounting in the first introductory chapter in a very layman language. And this is what is actually the objective of accounting as to why we do accounting in an accounting world. Which again means Delhi played, Mumbai could not. Delhi played, Mumbai could not. Okay, so we learned about what is accounting, wherein we read that I am Royal Challengers, identifying, measuring, recording, communicating. Then the next shortcut was what is the qualitative characteristic of accounting, which means Rajasthan Royal under construction. Third comes the primary objective of accounting, which means Delhi played, Mumbai could not. Then what does DPMC means? D is depiction of financial position. P is providing accounting information to its users. M is maintenance of records of business transactions. And C is calculation of profit and loss. So, like I said you, when your grandmother gives you money and she wants to know like how much money is left at the end of the day and what did you do with the money she gave. Okay. So in the similar terms, when an organization starts a business, they want to know what is the profit and loss. Like if you are investing like 1 lakh, after 1 year, you want to understand what is my profit, what is my loss, what am I doing with it, where do I stand? Is it profitable for me to continue the business or not? So these are all the primary objectives of accounting. So that is what the first and the last point says. Depiction of the financial position. Like what is your financial position? Is it good or bad when it comes to business? As to what profit you are making, do you foresee that you will make profit in the future? So that is depiction of financial position. Calculation of profit and loss. Accounting information which is recorded will help you identify the profit and loss your business is making. Okay, providing accounting information to its user, it is pretty much similar to communicating the information to the people within and outside the organization, which I have already told you in the definition of accounting. So it is pretty similar to providing accounting information to its user. So this is one of the primary objective of accounting. Then one more comes as the maintenance of records of business transaction. You know, the human brain is very limited in terms of retaining the data. So we cannot retain as to what business transaction happened a year ago. If we record all of these transactions, it will be helpful in terms of maintenance of records. Tomorrow we may need this for legal or for our reference purpose. Like this year we are purchasing some raw material. So we will want to know like what was the price last year when we purchased the same raw material. So these are some of the uses why we need the records to be maintained properly. So what is the primary objective of accounting? It is Delhi played, Mumbai could not. D is depiction of financial position. P is providing accounting information to its users. M is maintenance of records of business transactions. And C is calculation of profit and loss.